And here we are with the Money Podcast. I'm your host, Stacy Johnson, and welcome to Money, the podcast that helps you get richer one day at a time. Today we have one of our favorite guests, Miranda Marquit. Miranda, are you there?
I'm here. Thanks for having me on.
Well, thanks for being here, especially at this tumultuous time we're having. Oh my God, the stock market's going berserk.
It really is. It's kind of crazy out there, but it does also offer opportunities.
It definitely does. And just let's set the stage here before we get real into this conversation, Miranda, in case, because some people may be hearing us minutes, days, months, weeks after the podcast. So let's set the stage exactly where we are. It's Friday, March 20th. The stock market is not closed yet today, but it is down. We're down about 30%, 35% even from the highs. The coronavirus is sweeping the world and the nation, and there's a lot of fear in the air. And today's topic is, how do you know when the market is bottomed so you can try to get stocks at bargain prices? And this is something I have a little experience in because I've been in the investment business, either as an advisor or a writer, for about 40 years. Miranda also has a lot of experience in investing, right, Miranda?
Yeah, I don't have 40 years of experience, but I do have 15. So we'll take it.
That's plenty. Yeah, unless you started investing when you were zero, you wouldn't have 40 years of experience, I
That's
guess.
actually very accurate.
Well, one of the things I'm going to talk about today there are actually three things. There are three ways that I try to determine when the market is bottomed and when it's time to buy. And those three things are: one, when we see the light at the end of the tunnel; two, when the government rides to the rescue; and three, when the sky is falling. And we'll get into each one of those things individually. And let's start with when we begin to solve the underlying problem. Now, one might assume that this would be an awesome time to invest. I mean, after all, I own a bunch of Apple stock, for example. It was $320 a share. Now it's probably $240. So if you loved it at $320, you got to really love it at $240. But it's scary to buy now. So tell me, Miranda, are you buying now?
Yeah, so I am primarily an indexer, and I primarily use dollar cost averaging. So all of my stuff is on automatic. So yeah, by default, I'm still buying now. I do have some cash that is set aside for specific bargains, or if I decide that I want to buy even more shares of like a specific index, I can do that. And so I'm actually kind of weighing, like, can it go down further? Like, I mean, I don't want to get into market timing, and we're getting dangerously into market timing territory here. But for the most part, for me, it's just been business as usual. I have automatic contributions that I make to various accounts, and I am still just making those automatic contributions. And by default, each of those contributions buys more shares.
Right. And actually, Miranda, you brought up two excellent points that I want to underline. One, investing the way you do is the way people should be investing. And I too have index funds. I don't mean to imply that I don't. No, but really, I mean, you can't really lose if you invest some periodically, a fixed amount periodically in an index fund that's automatically diversified. Definitely the best way to invest. No question about it. And the other thing you also brought up that I wanted to underscore too, it sounds like I'm talking about market timing. And I guess in some way I kind of am. And that's a fool's game. I actually thought I have thought the market was overvalued for some time. In fact, I even wrote an article in last August, saying that I'm taking money off the table. I didn't take all my money off the table because I'm not a market timer.
Right.
But I could see when the market's getting a little overbought, and it was. Now, again, though, what I'm trying to do here is not necessarily say, let's time the market, sell everything, and then buy back in when I tell you to, because I'm not nearly smart enough for that. What I would like to do, though, is try to give you some sort of a gauge so you can figure out when things are at their worst, when it might be time to be a little more optimistic instead of pessimistic. Picking a market bottom isn't an exact science, but it's good to know that if you try to buy when things are at their worst, then you might have more profits when things are at their best. So again, I said there were three things. Let's talk about one of them. How are we going to know when the market or the economy is going to turn around? And my number one thing is when we begin to solve the underlying problem. Now, all market crashes are unique, and so all solutions or finding a time to step back into the market are also going to be unique. But when I say solve the underlying problem, what do I mean? Now we're dealing with the coronavirus. If the coronavirus were cured, if there was no more coronavirus, if we all took a pill, so we would all be cured, or we couldn't get it, we had a vaccine, it's over. Okay, the market's going to go down when there's no cure, and it's going to go up when there is a cure. So when you want to try to get into the stock market would be not when the tunnel is totally dark like it is right now. It's going to be when you can see the light at the end of that tunnel. Because once you're back out in the light, the market's already taken off without you. But are we there now? Do we see the light at the end of the tunnel? No, we really don't. We're about to have 2 million people are going to apply for unemployment next week. 200,000 applied this week. The economy is about to be in the worst shape potentially. I don't mean to
Right.
be chicken
Yes.
little.
we can't be fortune tellers here.
Yeah. But I mean, I think we're going to have super high unemployment. I don't think the worst has happened yet. What do you think? What are your feelings?
No, I'm in total agreement with you. I mean, I have been talking about the crappy fundamentals of this economy and the artificial props for the stock market for a couple of years now. So, I've in a way, it's sort of validating that it's finally happening because we've been kind of like, this should be happening. Like there's no reason to support the market we're having right now, that it's not supported by any of the fundamentals. It's not supported by anything any rational person would be looking at. So yeah, but like you, I'm not sure we've seen the worst yet because we're at the very beginning of this and there's a lot we don't know. We have been behind the curve at every move for this. We don't have, we said no to testing. Then when we finally started doing some testing, so we've limited who can be tested. So we just don't have a lot of data here. We don't know how long this is going to last. And we don't know yet whether we're going to be successful at flattening the curve, as they say. So, like you said, I mean, who knows? Like, we could see huge strains on unemployment. We don't know what kind of stimulus package we're actually going to end up with and who it's actually going to benefit. There is a lot of unknowns here. And that makes for market uncertainty. And, yeah, I'm with you. Like,
Yeah, well said.
I don't think we've hit the worst.
Yeah, I think you're right. And so I think if we can't know, and by the way, too, nobody knows what's going
Oh
to
yeah,
happen at
yeah.
any given
Nobody
time.
knows. Who knows?
And anyone who says they do is either a liar or an idiot, in which case you shouldn't listen to them anyway. So what we could do is we can try to, look into this thing, look into a crystal ball and try to decide what's going to happen next. But no one knows for sure. But what we can say, though, and what I can say through my 40 years of experience in the stock market is when you have a crash, until the underlying problem is beginning to be addressed, in other words, you could see a potential solution on the horizon, well, the market probably is not going to go up, at least not for any extended length of time. And that's exactly where we are right now. You can't see what's going on because we don't even know how many people have this virus yet. We just started testing apparently like a couple of days ago, really, mass testing anyway. So we don't even know what the problem is yet, much less what the solution is going to be. So for that reason, I'm not in the market right now. I mean, that is, I would not be optimistic about the market's chances right now. I actually am in the market a lot.
I was just going to say, like, you didn't pull everything out, did you? Like,
oh no, not in any way.
Yeah.
I'm not smart enough to time the market.
Right,
just
yeah.
not. I can actually, like you said though, Miranda, I knew the market was getting toppy, but I'm not smart enough to know when to buy back in. So I can't sell, even when I think that the market's going to fall.
Yeah, exactly. And one of the things that I did do, and we might have discussed this in a previous episode, but one of the things I did do was just before the end of 2019, just before the end of the year, I thought to myself, things are getting kind of crazy. I don't know when the crash will come. I don't know if it'll come in 2020. I don't know if we'll see one in 2021. I don't know. But what I do know is that my son starts college in fall of 2021, and I need to make sure there's money for that year of school. So I did make a slight tweak to his 529. I said, all right, how much money do I think he's going to need to cover 1 year of school? And I moved that into less risky assets. So I did kind of make a small tweak there because I didn't know what was coming or when it would come. I just said, well, I know that right now I don't know, and this is money that I know I'm going to need at X time. So I'm going to go ahead, move those assets, and then everything else keep business as usual.
Well, and that's brilliant. And actually, it's funny because we both agree that we don't want to time the market, but we also have enough experience to say, like, well, I've seen better times to invest than this. I think
Right.
I'll keep a little dry powder over here right now. And that's basically what I've been doing. Like, for example, you're supposed to have 50, a person my age, I'm 64. I should have about 50% of my long-term savings in stocks. I was down to about 30. In other words, I kept putting money in cash savings and not in the stock market. And so I still had a significant amount of my long-term savings in stocks, but I could have had more. And I just felt like there's too much optimism around. Something bad, some shoe has got to drop. The market was going up for 10 years. I mean, we had a bull market for 10 years, the longest ever. Well, you don't have to be a rocket scientist to figure out that sooner or later, the market's going to regress to the mean, which is going to require it to go down. And so I just got a little more cautious. It sounds like you did too.
Yeah, and I think that's a key there because it's kind of hard to tell that line. Like, where is that line between market timing and kind of like shoring up your financial position?
Yeah,
Like,
you're right.
yeah, it's kind of hard to find that line because none of us do want to market time. None of us know when the bottom is coming, and none of us are sure of what's next. So we do kind of need to say, okay, well, I'm going to take some preparatory steps, but we also want to be careful that we don't move from those preparatory steps into actual like attempting to forecast.
Yeah. Yeah, I agree with you. Now, so I'm going to try to keep us on track here, although it's fun to meander all over the place. But so I'm talking about three different ways that you can tell when the market might be about to turn. One of those is when you see the light at the end of the tunnel. We decided that is not the case here with coronavirus yet. A little too early. Things are promising. Promising things are happening. In fact, I just saw a press conference where they were talking about various potential vaccines, but nothing is there yet. We haven't seen the light at the end of the tunnel. Therefore, I'm not going to call for a market turnaround here. Okay, now let's go to the second thing. And this may have a little more promise. The second thing I'm looking for is when the cavalry rides to the rescue, the cavalry being Uncle Sam. When the economy goes into a recession, as happened in 2008, when the recession is severe, what we want Uncle Sam to do is step up and really help us prop up industries that may need it, prop up big employers, even help people directly. Now, there's two different ways that the federal government can address a weak economy. There's monetary stimulus, which is lowering interest rates. The Fed has already lowered rates to 0 this month. And fiscal stimulus, which is putting money in people's pockets with things like tax breaks. And the government is starting to do that right now, even as we speak. The Senate is debating a bill that's literally going to send checks to every adult American in order to try to stimulate the economy. We like to see something like that. If the government is pretending like nothing's wrong, and we're seeing these clouds on the horizon, that's a really bad sign. That's not happening here, though, right, Miranda?
Yeah, I mean, it might be a little bit late in coming, but yes, they've finally been moved to action. Sorry, we can cut that out if we don't want to be political, but yeah, but
No, that's fine.
the things might have been a little bit slow in coming, but yes, now they're leaping into action. My main concern at this particular juncture is there seems to be a lot of fighting over what should be done, who should be the primary beneficiaries, and then a lot of confusion over guidance or what anything means, right? Because one day somebody's like, oh, student loan payments are canceled. Oh, wait, no, they're not. We're just going to apply everything to the principal. Oh, wait, now they can put it off for X months. So there's a lot of word salad going out, a few things that seem reasonable, and then a lot of stuff that's just, not concrete. So that's kind of my
Yeah, and
concern.
actually,
Yeah, that's
just
my
a couple of
concern right
hours
now.
ago, and it's a legitimate concern. So actually, it's kind of like if we're talking if the analogy is a cavalry riding to the rescue, I can hear hooves beating on the dirt, but I can't see the cavalry yet. And so I'm still, it's encouraging because I'm hearing thundering hooves coming over the hill, but I haven't seen the cavalry. So I'm not really sure exactly what this rescue is going to look like. I'd feel a little better. I'll feel a little better when
Oh,
I
yeah.
do. Oh, I started to say just a couple of hours ago, they moved it. They moved the tax deadline back to July 15th. And so, as you say, this is a moving target. I mean, who knows what's going to happen?
Yeah, and like you said, like we can hear perhaps thundering hooves in the distance, but we don't really know how many horses there are and when they're going to actually arrive.
Great way to go with stretching my ridiculous analogy, Miranda. but at least we know the government's taking this seriously. That's a good thing.
Yes.
We're not quite there yet. Now, I wouldn't be surprised though when we are there, when the government says, "Oh, we're going to send everybody a check for $1,200, whatever it is they're going to do. We're going to shore up the cruise industry and the airlines and Boeing and blah blah blah." You'll probably see a market rally. But remember that we still haven't solved problem number one. We still haven't solved the underlying problem. But it is good that the cavalry is at least talking about riding to the rescue. Now, one final thing: when the sky is falling. Now, what I bought almost all the stocks that I own today, not all, but I'd say 80% of them, I bought on March 30th, 2009, which actually happened to be very close to the bottom of the market. Now, I didn't buy those stocks because I'm a genius. I bought them because I'm watching every day. I watch, what's it called? Jim Cramer and several shows on CNBC.
Yeah. The noise, as some people term it.
Yes, which can be annoying. But I try to get a handle on what's going on in situations like this. Frankly, when things are going smoothly, I don't watch all that stuff. But right now, I'm trying to get a handle on what's going on, so I'm watching all these things. And I was doing the same thing back in 2009. And I'll tell you what, every single person who got on TV or in print or on the radio was saying the world's coming to an end. I mean, this is it. Of course you can't buy now. It's horrible. It's going to get worse. And I thought, well, this is just crazy. Either I should buy canned food and a shotgun, or I should buy General Electric at $5 a share. I mean, the prices were just stupid. I bought JP Morgan at like $23, and it got up to 140 until this happened. I mean, there's just ridiculous buys out there and no good news at all. All bad. We're all going to die. And this marks a market bottom. When everybody is negative, that means they've sold. And if everybody's sold, there's only buyers left. So I'm looking for when the sky is falling, that's what I'm going to ring the register. That's what I'm going to buy stocks.
Yeah. And I'm just wondering if we've actually reached that point yet. I mean, everybody's pretty negative right now, but I'm wondering if we're really to the total negativity yet.
We're not. We're not. Well, depending on how you measure.
Right.
I mean, one measure of the investor sentiment is the AAII, the American Association of Individual Investors. Every week they poll individual investors and they find out whether they're bullish, meaning positive, or bearish, meaning negative. The more bearish they are, the more likely the market is to go up. It's a contrary indicator. And right now, at least the last one I saw, they were about 50% bearish. Now that's a big jump in bears over the last couple of weeks. But at the bottom of the last stock market crash, the bottom in 2009, they were 70% bearish. So investors can get more afraid than they are now, is the bottom line.
Yeah, and I think that's an interesting point to kind of watch that sentiment and say, okay, where are we at there before we get too crazy. But I mean, I think the other thing we're going to have to do is keep an eye on, like you were mentioning a little bit earlier, keep an eye on those unemployment claims, keep an eye on where we're at with some of these other things that actually indicate economic health. We like to look at the stock market. It's flashy, it's easy to understand, but it's not the economy. The stock market, specifically the Dow Jones Industrial Average, even though we all look at it, is not the economy. And so we also need to kind of look at that to say, okay, how does this stock market sentiment jive with what's going on in the economy?
Yeah, you're absolutely right. And I think, this is a really fascinating time because, like I said at the outset too, all these things are unique, including this. I've never seen anything like this. You know why? Because nobody has. There's never been a time, maybe in the Great Depression, but even then, there's never been a time when the government said, okay, everything closed. Everyone's out of work. I mean, this is crazy. And it's interesting. It's horrific, of course, but it's also fascinating to watch and to try to discern where we're going from here. I can't imagine that the market has bottomed when we're going to have millions more people unemployed just in the next few weeks. And I don't mean to, I'm sure that I sound like I'm freaking out, but it's just, I'm not. I know we're going to come back because we will, because the United States always does. And human beings are capitalists and they're going to do well. I mean, we will. But it's just going to take some time. And it's probably going to get uglier before it gets prettier.
Yeah, I think that's a really good point too. And it goes back to what we were saying at the beginning. It's like we're not making huge changes here. Now is not the time to sell everything. And in the end, if the stock market doesn't come back, if we don't bounce back, we've got bigger problems.
Yeah, exactly. Like I said, if the economy is not going to ever recover, then buy a shotgun and canned goods. I mean, but I don't believe that's the case. The economy will recover, and it is certainly too late to sell. And like I said, I think in one of the last times we spoke, Miranda, I'm not freaked out because I don't have so much money in the stock market that it's going to ruin my life. And I'm 64. I really don't want to lose a bunch of money, but I'm not worried about it. It may take 5 years to come back. That's okay. I'll be 69 then, but I know it will come back. And so that's why I'm able to have intelligent conversation about it instead of wailing and gnashing my teeth.
And I think that's a really good point to keep in mind. So even though there's a lot of near-term doom and gloom, we do see the clouds parting in the future, and off in the distance, the sunshine will eventually emerge.
Absolutely. So everybody out there, be calm, pay attention. Other people's panic can make you money, but you don't ever, ever panic because that'll cost you money. And remember what's his name? Buffett. Warren Buffett said, probably our most successful investor in the last century, said that be fearful when others are greedy and be greedy when others are fearful. And you will find yourself making a lot of money with that simple sentence. Miranda, you have anything else to add?
Nope. Sorry, it sounded like you were wrapping up, so I was just...
Well, I am wrapping
up.
Sorry. But it's all good. But I sure appreciate you being here with me at this tumultuous time. And I'm looking forward to our next conversation. And hopefully the outlook will be much brighter next time we talk.
One hopes. Thank you so much for having me on today.
You're quite welcome. Oh, and by the way, Miranda, I forgot to allow for some shameless self-promotion here. For those who want to talk or look at Miranda's work, which is extensive and excellent. She writes for moneytalksnews.com, but she also has her own website, mirandamarquit.com. And you also have a column at U.S. News and World Report. Is that right?
Yes, that's right. I write an investing column for U.S. News and World Report, and I also contribute to the ticker tape over at TD Ameritrade.
Awesome. And I apologize for taking up all your time and not shamelessly promoting you before now. But at least we got that in.
Oh, no worries. Just being on here is kind of like a shameless promotion.
Okay. Well, y'all, will talk to you soon. And everyone else out there, have a very, very safe and successful weekend. And we'll talk to you next week. I'm Stacy Johnson, and this is Your Money Podcast.